Hey friends, thanks so much for tuning in. It's absolutely wonderful to have you guys back. I've done a lot of preparation for today's interview. I think it's an important one, especially for those of you that want to be in the natural resource market. Today we're going to talk about uranium, we're going to talk about oil, and we're going to talk about gold with Marin Katusa from KatusaResearch.com. Marin, thanks for coming on.
It's my pleasure.
You're a young man with many achievements under your belt already. How did you get started in this investment game?
Almost by fluke. I grew up in Vancouver, and Vancouver is the international hub for resource investment. I went to university here on an academic scholarship, and at the time it was called the Science One, where they pick a bunch of kids across Canada and they try to put them into the Science One program. And I knew instantly that I didn't want to be a doctor, and I had a knack to math. And interestingly enough, to keep your scholarship, you take what's called birdie courses. Birdie courses were known as, you don't have to spend that much time compared to like quantum mechanics that I was taking and calculus and all these complicated courses. And so you ask guys who are older, and they take rocks for jocks, the geology courses, and I absolutely fell in love with it. So for all my electives, I took the geology courses. And interestingly enough, my professor at the time, Dr. Mark Buston, I didn't know he was one of the cutting edge people on shale innovation. He advised some of the world's largest companies on shale. I'd go, hey, I really like this geology. What do you think? But, it was 1999 and there were literally no jobs. And he said, oh man, you're good at math, stick to math. So that's what I did. And then, you go through a CFA program and you look at all these different aspects. What am I going to do? Do I do an MBA? And I stumbled across one of my former students. I taught these two brothers calculus. And at the time, I became obsessed with tungsten. I became known as the tungsten guy in the industry where everyone would publish my material. And their dad happened to be a mining executive of a tungsten company. And when I would teach the calculus, I try to do it in a fun way. I was a really young guy teaching calculus at the university level. And I would talk about, when you get a comb, let's pretend it's a mining pit and how much gold is in there, tungsten. And I just happened to say tungsten. And I guess these kids told their dad about this young, wacky math guy who's talking about mining all the time. He asked to come talk to me, and his name's Jim Robertson. We continue to this day to be great friends. And at the time, I was so obsessed with it, and I showed him all my research. We went for lunch, and I'm like 23 years old at the time. And I came up with like a 150-page report, and he just said, wow, do you want to work with us? I said, no, I'm a teacher. And long story short, I took out a large loan on my house, and I invested in 3 tungsten companies. The first 9 months were an experience I will never forget, probably contributed to my heart disease because I was down.
I'm sure it was terrifying.
I remember sitting there going, geez, if I can just get back to par, I'm out of the stock game. And as I kept focusing on my research, all my buddies would go out at nighttime with their girlfriends. I became obsessed with research, literally to the point that guys that were my buddies who now work for me in my office, they would come to my home office and they would see hundreds and hundreds stacked documents of company brochures and all this data, maps all over my room. And I just knew I would go. And fortunately, those 3 tungsten companies, for example, Primary Metals was the one Jim Robertson ran, the 25-cent financing, 40-cent warrants. And that first 9 months tested down to, I think, like 15 cents or something. And it was so painful for me. But then it ended up getting bought out by Sojitz. And I remember when we did the site visit, stock was $4.50. So I sold, I left teaching, and then I got aggressively into uranium in 2004. And that's kind of where the tipping point for my career was. I was very blessed and lucky to meet guys like Doug Casey and Rick Rule, and they took an interest in me. I ended up, becoming mentored by both of them, and then we created a fund. And I've been very lucky about being at the right time at the right place. But also, luck is being prepared when the opportunity arises. I literally lived on the road for 12 years. And I remember Rick, when we first sat down and had this great plan, he goes, look, I really think you have an incredible potential, but I want you to ruin your personal life to make a fortune for me. It was a really interesting time for me. And, you're talking about being a 25, 26-year-old kid traveling around the world. And this is what kind of helped me develop my thesis to where I've become today. And, I used to go to all parts of the world to find that gold mine in an overlooked area. And in a bull market, really the tipping point for me was about 2011, when I just got married and we were at the Casey show, peak of the market. And I just went up and I said, this cycle's popped. Every company here is going to go down at least 50%. And I put together a talk that I thought was the best talk I ever gave in my career. And I was ranked the lowest speaker at the conference.
Because you were telling people what they didn't want to hear.
Yeah.
Well, and I'm sorry to have interrupted, but let me brag you up a little bit. You're 41 years old. You've been at this for a very long time. You're a multi-millionaire, and you know what you're talking about. So I wanted to ask you about uranium, oil, gold. Uranium specifically, I don't know much about, but I think people would be shocked to learn how much of the energy we use every day comes from nuclear. So energy independence. President Trump was and should be very proud of America's energy independence. We would have never accomplished that if anybody else had gotten in the White House, in my opinion. But now, due to the coronavirus, much of that has unwound, and I'm very concerned. So I want to talk to you about oil. Where do you think we should begin?
Well, I think it comes down to supply chains and innovation. The success of the U.S. oil renaissance was solely based off of two things: innovation with fracking and access to relatively cheap money, historically speaking. Now, when you look at what has happened in the nuclear space, it was the exact opposite of what happened in the oil sector over the last 15 years. So what I mean by that is, if you go back to the 70s and 80s, America was the world's largest producer of uranium. Okay. It's also the largest consumer of uranium. So it made sense. But what happened with the fall of the Soviet Union was, it actually happened in Vancouver. It was an agreement to take the HEU to LEU and essentially warheads to energy. And it became so cheap for the utilities to just buy the downblended Soviet fuel. And then Kazakhstan was an incredible growth. The first time I went to Kazakhstan in early 2003, it produced less than 1 million pounds of uranium, and now it produces around 65 million pounds. So imagine all of OPEC and Russia in one country concentration for commodity production. And that was solely based off of American innovation. Now remember, ISR, in situ recovery, was developed and perfected in the US, in Wyoming. Now, the Kazakhs had the benefit of the Russian technology on exploration and development. And in the mid 2000s, it attracted so much foreign capital from the Canadians, such as Cameco, the French, Riba back then, today it's Orano, the Japanese, and even the Chinese, and specifically the Russians have the largest amount of Kazakh production of anyone non-Kazakh as Kazatomprom. So it's used American innovation to really turn the American industry upside down, to the point that the Americans produce essentially nothing right now on American soil. So it imports 100% of any of the uranium it consumes, which is an absolute supply chain risk. It just doesn't make any sense. So the DOE has now realized that, and there's been a lot of motions moving forward and what's going to happen. And essentially, the Section 232 petition failed, which I said on a conference with all the petitioners on a panel. I thought it was the wrong way to go about it. They're good guys who are doing it, and they had the best interests at heart. But it's a very complicated situation. And essentially, what people need to focus on, there's going to be a certain amount of made in the U.S. production, but it has to be competitive. The government can't be seen as propping up what I call welfare mining companies. And essentially, it's going to be about being competitive on a global scale, and you've got to use innovation. So it's going to be ISR. So, there's this misconception in the market, and I get a lot of hate from the uranium trolls out there who think, it's got to be great or these different things. But if you look at the grades in Kazakhstan, it's about margin. And in the US specifically moving forward, it's going to be about permitted production that can come online with a reserve life index that can meet the quota that the government, and it has to stay competitive. And the reality is conventional, the way people normally think of uranium, digging up rock, blasting rock, moving rock, crushing rock, and extracting uranium from the ore. That just is more expensive. And the Kazakh model of what the Americans have appreciated in the oil renaissance using new technology of shale, and the Kazakh model of using ISR, I coined a phrase many years ago called wiser uranium. So it's warm ISR. And for the Americans to be competitive on a global scale, they're going to be innovative, and never underestimate the American innovation. It's incredible. But people have to realize that just because you have a big pounds project somewhere in a negative swap line nation or somewhere in an AK-47 nation, there's this misconception that a 10 or 20, 30 million market cap company will be able to finance $1 billion or $2 billion capex project. It ain't going to happen. Okay, I'm one of the largest financiers in the game. And why stack the odds against you? When you look at wiser uranium or ISR uranium in the US, some of these projects are less than $20 million capex to bring onto online, and it's about the production facilities, the production zones, and you don't need to do a $300-400 million capex out of the gate. So it's about return on equity, and the deals that the government are going to do. Remember, they're going to be responsible for this. They can't be seen like what happened in the green energy revolution, where so much money went to money heaven because of the green dream. Trump's going to make everyone in the government accountable for this, and it's going to be about staying economic. And I think ISR permitted in the US is the way to go, specifically wiser, warm ISR.
All right, well, maybe you can give us some picks and some names in that sector in a second, but I just want to point out for people, the book you guys see behind Marin, The Colder War, he wrote 7 years ago. It's a New York Times best-selling book, and in that book, you argued that Russia has weaponized its energy resources as an instrument of influence, ultimately to gain power, and everything you warned about in that book is panning out. Now, Russia and the Saudis have attacked the U.S. shale sector to impair U.S. energy dominance. That's what I was talking about at the beginning of the interview here. And the U.S. Department of Energy finally caught up with your thinking, recently publishing a report on restoring America's leadership in nuclear energy. I'll read a bit directly from it. It says, quote, America's broad strategy of energy dominance has a gaping vulnerability. Russia, a nation that has weaponized its energy supply as an instrument of coercion, dominating nuclear markets. So if this colder war unfolds, which you basically predicted in that book, how concerned should the average Joe be about this?
People would be shocked to realize that 1 in every 5 homes in America are powered by nuclear energy. Globally speaking, it's 1 in every 10 homes. Nuclear powers about 10% of the global electricity baseload power. Everyone's focused on the green dream, and I personally benefited. I financed the largest geothermal project in America in the last 30 years. So I'm about making money, and I look at these aspects that is so misunderstood. And 1 in every 10 homes in America, it's about 1 out of every 8 right now, is powered by Russian nuclear fuel or the former Soviet-controlled states. I don't think that would feel well. And you look at just where things are going with the U.S. suspension agreement with the Russians and the fuel. It's even with everything Trump's doing right now. And even when there will be 150 million baht of uranium production, it's an industry that has been so neglected overnight. It can't be binary where they just become all independent overnight. So this is what I've been, talking about for years, and it's about enrichment. The Soviets or the Russians control a little over half of the world's enrichment capacity. You look at the reserve life index moving forward. Putin and his administration. And when I say the Russian influence, I mean the former Soviets. And there's an old saying that I talked about in my book: all roads lead back to Moscow and the former Soviet Union. So anyone who's invested in Mongolia found that out, with the Russians taking over the uranium assets and the Kazakhs and the alignment. The Russians have a very long-term perspective here, very different than the West. It's not just about the uranium, it's about the nuclear fuel cycle, and they're very vertically integrated, from building the plants to funding the nuclear power plants around the world, providing offtake agreements for the fuel, and then also taking care of the used fuel. So the Russians have a very different perspective on this, and think about from a longer term perspective, what better way of leverage over an emerging market than the power grid? right? You want social upheaval, oh, turn off the power grid. So what I've been trying to educate people on is in the US, there's a great opportunity here, but don't get caught up buying things that still need permitting risk or financing risk. Because the government, there's this misconception in the market right now that I want everyone to understand, that they think, oh, we're going to get fast tracked because America needs uranium. That's not going to happen. And uranium is the hardest commodity to permit. Think about how mining is difficult around the world,
Right.
whether you're in a positive swap line nation or a negative swap line nation.
Let me interject there. We're going to talk about that because your new video really woke me up to some things I'd never thought about. The importance of a dollar swap line as it relates to gold. We're going to get back to that, guys. So sorry to interrupt.
Yeah, and I just think that you want to look right now. Think about it from just a Warren Buffett perspective. Okay, he just had his AGM, so Warren Buffett's popular in the news again. And why would I take any massive risks on permitting? Because there's so many social aspects and political aspects to permitting. When I can buy, super advanced, permitted, built infrastructure trading at, say, 70% discount to its NAV at current spot prices, that's called value investing. And that's the opportunity in uranium in the US. Look, there's no secret I'm a large shareholder of Uranium Energy Corp. My subscribers have done very well on it. It's in my newsletter. And I just think, you look at the US, within the US peer group, it has the largest resource base of permitted 43101 measured and indicated resources. And they have a plant built. They don't need to go and raise money, and they don't need to go and hopefully build a $200 or $300 million plant. It's an existing ISR plant. So when I look at that perspective and the advantage, I'm one of the few people that have visited every single U.S. producing asset. And you look at the infrastructure risks, you look at the financing risks and permitting risks. You don't need to take any of that. So for myself, you look at Cameco and UEC have the two largest permitted, built, and available to come online to meet the DOE government mandates. And they're globally economic, and they don't need that DOE purchase price. Now, the conventional producers will, and it's about reserve life index. So building a project is very expensive and time risky. And I've been doing this for 20 years. Very, very few mines have come on time and on budget. Okay, so we take these feasibility studies that these management teams are promoting with a grain of salt. You don't need to take that risk, is what my argument is. Built, permitted assets ready to go on to meet this demand is there. And uranium used to be a demand question. Where's the reactors, the growth going to come in because of what happened to Fukushima? But with this virus, again, it's been about the supply chain. Now the whole supply question is coming into question, because you look at what's happened in Kazakhstan. They're the world's largest producer, about 40% of primary uranium production. But because they've shut down all drilling in Kazakhstan, ISR, think of it like an oil well. It has natural decline rates, and you got to keep drilling for next year's production today. And if you're not drilling today and pumping in that fluid to really pregnate the reservoir and load up the reservoir to produce next year, right. There could be some production shocks next year, depending on how long the virus keeps drilling shut down in the stands.
Well, can I ask you something? Because we're going to see those same supply shocks in the gold market, and where we're not going to necessarily see any supply shocks to the downside is in the oil market. And I wanted your opinion on this, because we're witnessing history in the energy markets in 2020. Wild swings in the oil price. I mean, to say the least, negative carry to investment grade companies turning into junk overnight. What is next in the oil patch in your view? Because what's happened with oil just in the past couple of months could not have been conceived of 6, 7, 8, 9 months ago. Same with the U.S. economy, frankly.
Look, anyone who's been reading what I've said, I've been very bearish on oil, and I continue to be. Again, it's not a supply issue. And, I've always stated the peak oil was nonsense. And that, again, people don't like when you challenge these religious convictions. But it really comes down to the budgets. You look at someone like Saudi Arabia, they just announced that, oh man, like even they didn't expect it to go, because what happened in the US is now going globally on, the the supply tanks and the, the big freighters are filling up faster than expected. So I guess the big question for everyone to look at is what Q3 is going to be like. And the market is right now saying it's going to get a lot better. I'm not yet convinced of that because I want to see the second wave of the virus. And we're seeing, the Russian numbers look very discouraging. The numbers coming out of Africa and certain areas in South America, it's great to hope for the best, but, I just don't know if people's consumption habits, travel habits, and more importantly, will the economy recover in Q3, Q4 the way everyone's expecting? So there's a lot of hope priced in, and I think you got to be very careful in the oil patch. Now, a lot of guys are saying, yeah, but everything's going to shut down because the companies are going bankrupt and they're not meeting the debt. That's not how the actual bankruptcy works. I've written about this for 6-7 years. I've shown the wall of worry of the debt. And remember, one thing that the bankers and the banks and people investing, the private equity funds investing in the bond market, the biggest worry a guy in the bond market is getting his hands dirty. And what I mean by that is rolling up his sleeves and actually becoming an operator. They don't want to do that. And that's when I coined the phrase, amend, extend, and pretend that the debt's going to be okay. And that's what you're going to see in the oil patch. Now, the equity guys will get their asses handed to them in many situations. So you got to be very careful. And this is where understanding the math of the financial balance sheets really matters. And do not expect that just because a company goes bankrupt, the production doesn't shut down. The production keeps going. And in many situations, let me explain another fact that a lot of people don't understand. When you travel the Urals or across Russia, so much of their production isn't the way people think of shale, where you can turn it on and off quickly. These are wells that have been producing for decades. And if you shut it down, you're not bringing those wells back on because they're legacy production. And an asset like Saudi Aramco's, the Guahar, which is the flagship asset of theirs, that is so big, and the way the density and the pressure works in the reservoirs, you can't just shut that down overnight. So it's a very complicated situation. So don't expect supply to just shut down to meet the demand. We're going to be oversupplied for a few more months, in my opinion, at the minimum.
All right. I want to move to gold now. And your video, The War on Gold, it was an emergency briefing. It's up on your YouTube channel, dated April 28th, 2020. You point out that most, or at least many, of the largest gold deposits in the world are in negative swap line nations. I've never heard anybody bring that up before. Do you want to talk about the importance of a dollar swap line? And then let's talk about how many gold mines have been shut down due to the coronavirus and what that's going to do to supply, because demand is only rising. So
the swap lines are essentially from the US Fed that have an agreement with 15 other nations. And those 15 nations have accepted the terms and conditions set by the US Fed, of course, the government. And essentially, the way to look at it is those 15 nations have been granted true allyship, because if you're going to be alleviating the shortage of US dollars for someone like Japan and Korea and the ECB, the European Central Bank, Brazil, Mexico, you're not going to do that to an enemy. So those are 15 countries, and it's going to continue to grow, is what I've been saying, because the Russians and the Chinese, the emerging market superpowers, are also trying to create their own alliances. Now, with swaps, positive swaps are countries that have been granted a swap line, and it's just under $500 billion. So think about it this way. Think about all the media noise that came from the $2 trillion Congress approval. And it was a big amount. It was the biggest ever. But now compare that to the $500 billion that has already been granted to the swap line nations, and nobody's talking about it. Because I have such personal relationships with many of the executives in the mining sector, I talked to about 14, 15 different mining executives and producers, and not a single one knew what a swap line was. Okay, these are mining guys. So when I charted all this, what I said is the market, most of the analysts in the business work for brokerage firms, and these brokerage firms generate revenue from their salesmen, the investment bankers, to bring trades, financings, mergers and acquisitions, and debt deals on the bond market. Now, the way the analysts do their NPVs and their discounts, and the essentially something in a risky area is getting the same discount rate as something in Nevada or in Ontario or Quebec in Canada or Australia. And I just said, hey, we need to really rethink this, because I've traveled to over 100 countries. I'm one of the largest financiers in the sector. And when you travel and been there and done that, you start realizing that, no, this isn't going to make sense anymore. And many of these negative swap line nations are already, increasing taxes, increasing royalties, putting FX controls on the countries, where if you produce the gold in some of these countries, you can't sell it to a Swiss refinery at spot market. You have to sell it to the government at a fixed rate in their local currency, at the government's fixed rate currency. Now, that seems like, oh, well, that's not a big deal. But the street rate currency, like if you look at what Argentina has been doing, or in the lira in Turkey, the street rate for a US dollar for the Argentinian or Turkey lira is very different from the government fixed rate. So they keep clipping. Think of it as a new tax. And in many cases, you're going to be threatening nationalization. And we've seen it before, because there's such a desperation for US dollars. And the gold bugs generally have a tough time with this concept, because they've been ingrained for decades thinking, gold up, US dollar down. But a few years ago, I challenged some of my partners, and openly I said, no, I think we're going to enter a market where the US dollar is going to go up and gold will go up. And that's been a very difficult thing to think. And since I even did this emergency briefing, we saw Zambia prevent the Glencore mine manager from leaving the country. They brought him back and forced him to restart the mine, even though Glencore wanted to shut it down. You've seen FX controls be slapped on. The environmental minister of Argentina is openly talking about nationalizing the foreign owners, because they're not taking care of the environment. And in that briefing, I said these countries are going to use the banner that the North American companies have been talking about, which is ESG, environmental, social, and governance. And the NGOs are going to support this because of the anti-mining. And essentially what happens is, just like we've seen in the oil patch, and I've talked about in my book, when Mexico nationalized their oil fields, you look at the Cantarell Basin, world-class basin, but it went down over 60% in production within a decade and a half, because they didn't reinvest the money into the fields like the North American companies would. In fact, they just subsidize their social programs from the revenues of these oil deposits, and the production goes down. So ultimately, it's going to be very bullish for gold. And I'm just saying that analysts need to rethink how they're pricing the risk in negative swap line nations versus positive swap line nations, because a country with a positive swap line nation isn't going to screw around with nationalizing a big American gold mine, because you take some of these countries have drawn down $200 billion on their swap already. And this is only in the last month and a half. Like, you got to think this is going to be many years out. These swap lines are going to get to trillions and trillions of dollars. And they're not going to risk the swap line, which is orders of magnitude larger than the revenue they could take from nationalizing a gold mine. But a negative swap line nation is going to increase their taxes, is going to be taking their bigger take of these foreign-owned assets under the banner of ESG, because it's going to get the support of the locals, it's going to get support of the NGOs, and it's going to get the support of the emerging market superpowers such as China and Russia.
All right. Well, that's some deep thinking. Guys, that's why you probably want to just go to katusaresearch.com and check it out for yourself. I'm going to play a soundbite here for you, if you don't mind. It's from our friends over there at McIlvaney Financial. I was listening to this this morning, actually, and they're talking about a book written in 1935 called The Battle for Investment Survival. It was written by Gerald Loeb. And I want to play this for you in the audience, just because now we've all sort of recently lived through a crash of our own, right? Based on the virus, the shutdown of the economy, we saw the Dow go from something like 28,000 to 18,000 in short order. Now the Fed is papering over all of it. So I think people are starting to think all's well again, especially once the economy opens up. But if we just talk about the possibility of a crash, of the economy, of a global crash, financially speaking, if this thing does get worse and all the dominoes start to fall, I want people to think about how folks survived that crash in 1929 in the Great Depression. Listen to this.
Gerald Loeb, and The Battle for Investment Survival. I think, what you said reminds me of what he says about gold and silver. He says, in the history of the world, we find the record of savings really saved through buying gold, hoarding precious stones, and other forms of hard wealth, privately secreted.
Right.
In the future history of America, most of us will, in my opinion, learn this lesson too late.
I'll pause it there. The point being that tangible assets are what allowed people to survive I think what I wanted to ask you then is what we saw happen with oil. No one wanted it delivered and they didn't know how to store it. So the price for oil went negative, which was incomprehensible to most of us watching. But for gold, everyone knows how to store it, and many want delivery, and demand is only rising. So how will this work for futures contracts? Do you think gold is set up to do the exact opposite of what oil did?
That's a great point, and I've talked about this about over a month ago. I wrote this to my subscribers saying, look, like if you're going to own gold, the crazy part of some of these ETFs, the way it is it's structured exactly. We would see the opposite of what happened in the oil patch, where the paper trade cannot really deliver that gold, and I just think it's a risky aspect, and ultimately I think the exchange would step in and halt it. I always refer back to the case, what happened to the Hunts in the silver market. Even though they played by the rules and they did what was legal, at the end of the day, they didn't want the system, the exchange and the regulators shut it down and prevented it from their business plan being executed. So even though technically speaking, I think that's exactly what would happen, the regulators would prevent it from happening, because it would have such an implication on the banking system, and the risks associated to that. But you're right. Technically speaking, that's exactly what would happen.
All right, final question for you. You mentioned silver. I've got a lot of physical silver. I have some physical gold. Many of our listeners do. What's your forecast for the precious metals in, say, the next 5 years?
I think if you have a 5-year time frame, specifically if you're in non-US dollar nations, gold is something that you really should be exposed to. I've been writing about this for years. Now, in the near term, in the US dollar, I think the US dollar is going to have an incredible run. And it's a hard concept to expect. But if you go out to 5 years, I think even in US dollars, gold will be an incredible asset to own. Silver is an interesting one. Like yourself, I own quite a significant amount of bullion myself. I don't like playing the ETFs. I've always said to people, if you're going to own the bullion and you want exposure to bullion, own bullion, not the ETFs. And then you can get into the producers and the developers for your portfolio balance. But I think, one thing I want to really remind everyone, I remember in 2009 and 10, I kept showing people that the ratio, the historical ratio of oil to gold, the historical ratio of natural gas to oil was 6-1. And so many of the people ingrained in the sector kept saying natural gas has to go up, natural gas has to go up. And I said, no, because of the way the sector changed with innovation. We saw areas as high as 75, 80-1 from oil to natural gas. So there's been this, some of my peers keep focusing on the historical ratio of gold to silver. I just don't buy that ratio. It comes down to, the true all-in sustaining cost of mines, and also the cost of sales for many of them when you include depreciation. So silver has not had the run gold has from an annual perspective, but it's a very important metal from a monetary standpoint and also an industrial standpoint. And people forget, as the green revolution does continue, and it will continue, silver will benefit from that industrial demand. And a lot of the silver comes as a byproduct. And I expect that, the base metals will struggle here in the near term. And these types of production, you talked about how many gold mines were offline because of COVID. It was, at one point, it was over 150 gold mines. The last number that we updated as of yesterday, so it was that May 5th, was 114 primary gold mines were offline. I think it was another, going off of memory, another 80 primary silver mines. So you look at that production standpoint, again, mines are not like a light switch. You can't just turn them on and off. It takes time to bring them back online, depending if it's an open pit, underground, if it is sulfide oxide, like heap leach. There's just different aspects and different areas to consider. But, there's an old saying that, gold is the currency of kings and silver is the currency of gentlemen. I'm more levered to gold, specifically from a bullion standpoint and specifically from a equity standpoint. We had an incredible run with Pan American Silver. we took our profits. But right now, I think gold is the place to be.
All right. Well, fair enough. But I do want to point out for the audience and for myself, just a gentle reminder, as we watch the Fed and central banks around the world print into oblivion, we understand that the energy it takes to print currency out of thin air is virtually none. It takes no effort. It takes no intelligence. It takes no planning. It takes no energy. And to me, physical gold and physical silver are stores of energy and wealth that was spent to extract them in a world gone mad. So for me, it feels good to have this stuff as an insurance policy against a worst case scenario. Imagine a 1929 that goes global.
When we talked about the positive swaps and negative swaps, think of it this way. About 2/3 of the world's production comes from negative swap lines, and a third comes from positive swaps. But it's really the reserves that people have to focus on, the unproduced, the wealth in the ground. And that's when you really see the vulnerability here of nationalization. So, right now, to me, the place to be is the two yellow metals, U.S. uranium production with ISR, bet big there, and gold. I think those are two areas that the general markets haven't yet picked up. People who are in the industry are loving what's happened to gold. We're struggling between 1685 and 1725, whatever that range bound is. But, this is going to go a lot higher. And like you said, it's not just about what the US is doing. When you look at the actual amount of debt out there in US dollars, gold is something that across the board, not just American investors, but emerging market investors are going to realize in a deflationary market with, there's negative interest rates. You don't have that disadvantage that Warren Buffett used to talk about of holding gold. The opposite is it's a positive carry now. So it's a great place to be.
All right. Well, I appreciate your time today. Guys, you can find Marin Katusa on YouTube. The name of that channel is Katusa Research. And then I suppose the other best place to find you is katusaresearch.com?
Yeah, just go to my website. I publish so much material weekly. We've got all our historical reports. And in fact, one thing that your audience may appreciate is I got into a little bit of a disagreement with my publisher because of the success of my first book. It's kind of like that Hollywood aspect. They want you to kind of reproduce the proven winner. Yeah. And I just said, look, man, the geopolitics is there. I've been there, done that. I want to talk about my unique framework on, after traveling to all these countries, I want to give an investment perspective. And I said, screw it. I'm just going to publish that book for free to my subscribers. And it's there on the website. So we called it Resource Market Millionaire. And anyone who wants to see my model, my framework, and my the technicals that we go, how we approach our philosophy for speculation and investment, because those are two very different things. It's all there for free.
Well, Marin, I really do appreciate your time today. Thanks so much for coming on.
It was my pleasure.
All right. Guys, thanks so much for tuning in. We very much appreciate you. And you can find us directly with Real News 24/7 at sgtreport.com. Thanks for tuning in, guys. God bless. Bye-bye.
The Democrat Party, the globalist party, the totalitarian party, whatever you want to call them, they censured her for going to the White House, speaking to the president, portraying him in a positive light, and speaking about hydroxychloroquine and Zithromax that saved her life. They have since censured her.